Can everybody hear me? Because I usually have a pretty big mouth. Good. Thank you for the introduction. Shark Tank sounds fun. That's my favorite show. I love to watch that. All right, I'm going to try to go through this manual because I know people like to go through the manual, make notes on it. Always raise your hand if you have questions, because I'm here for you guys to understand these things. And I tend to talk a little fast. Sometimes I go a little fast. Of course, it can't find an internet connection. And so what we're going to do is we're going to go through and start on page 3. How many of you are using QuickBooks right now? Oh, so this might be a little bit repetitive for you initially, because we're going to go through starting a company, and then we're going to look behind and see all the settings that QuickBooks assigns, and I'll show you how you can change some of those settings because not all of them are optimal for your business. How many of you run a small business? Good. How many of you are thinking of starting a new business? Good. Great. All right, well, the first thing we're going to do is we're going to open a sample company just so you can see what one looks like if you haven't. And if you'll notice on page 3, I tell you can open a sample company file, and there's one that comes with QuickBooks. Or there's two of them, actually. There is a product-based business, and there's a service-based business. I actually have QuickBooks Accountant Edition. Do you see that right there? So I'm going to have a little more than you're going to have with QuickBooks Pro. For most businesses, QuickBooks Pro will be sufficient. I use the Accountant's Edition. Number one, I get it because I'm part of the Intuit community and I pay my annual fee. But also because I need to import client files. And to do that, I need the Accountant's Edition. So they can say, anybody ever do send your file to your accountant? Anybody ever do that? Yeah, that's because they have the Accountant's Edition. So I'm going to open up this sample product-based business just so we can see what the interface looks like. Remember, you've got QuickBooks, the software running, and then within that is the data file, and that's what we're opening right now is the data file. You can have unlimited data files. It's only limited by your hard drive space. Since it's a sample, it's going to want to update to the current year. All right, so like I said, when you buy QuickBooks, the license says you can install it on 2 machines. However, you cannot use it simultaneously. Only one person at a time could use it. The problem there becomes if you put the software on your laptop and then you put the software on your desktop, where's your data file? You'd have to move it back and forth. All right? So if generally with small business, it's going to be on one machine because they're not going to move their data file back and forth. You can, if you have more than one user, put it on a server where your data file sits on the server and then the client machines access that data file. So if you need to have more than one user, and then you'd have to buy additional licenses to have simultaneous use. But if only one person's going to be at a time, you don't have to worry about that, right? All right, when you open up QuickBooks, of course, you're not going to get this Accountant Center. Look on page 4. I try to explain some of the terminology because I think that's sometimes the biggest hang-up we have with everything in life. I mean, if we're looking at an insurance policy, if we're looking at anything, it's knowing the terminology. So if you need to go out to the helps and get help, bless you, you need to know, what am I looking for? So as you look on page 4, I've given you the interface that you're seeing here. And I've also defined some things. This is called the home page. Now sometimes people will close it accidentally and then you could spend an hour trying to figure out how to open it back up. But it's right here, home. All right? So it's going to be on your icon bar. That's going to be your home page. And again, this is the icon bar. It's little icons that sit across the top. And you can customize that. right click. I always say right click is your best friend when it comes to a computer. I always right click to see if something's on the shortcut menu instead of trying to dig around in all those menus and spend 2 hours trying to find something. So as you can see, I right click on that toolbar and up comes customize the icon bar. So you can set that up to meet your needs. When we look at this home page, it is divided into various sections: vendors, customers, employees, if I had this struck down a little further. And I want you to notice, a lot of times we look at something and we don't see the obvious. All of us do that. I want you to see these little arrows on here. And they kind of show you how tasks will flow into each other. So if you're up in the vendor section, which has everything to do with purchasing activities in your business, you can enter a purchase order. You don't have to, but if you do, you would then receive your inventory or whatever it is that you put on that purchase order. At this point, you can enter a bill or just receive. All right, sometimes you may get it with just a packing slip. In that case, you're going to need to enter the bill against that receipt. So that's what that little arrow is showing you. And then once you do that, then you can pay your bills. Again, if you bypass this whole row, you don't have to use those steps. You can just simply enter bills and then go and pay your bills. Well, sometimes I see clients come in and they're going through all this extra steps because they'll enter their bill and then they'll pay their bill when really they paid their bill online, or they just wrote a manual check. Well, they didn't need to go through this whole step. This is used when you're not going to pay your bill at the same time that you're entering it. If you've already paid it or you're paying it online, skip all that stuff because that's just extra work for you. You're just going to go down here and write a check. And we're going to see all these things as over the course of the next 2 days. That when you write this check, it's going to record the expense anyway. So you don't need to go through that extra step. This is really used when you're going to put in multiple bills and cut checks for them. I don't know if anybody does that anymore. Does anybody do that anymore? Do you do it? I don't. I'm a lazy person. I set up everything in my bank to be EFT. Actually, I put everything on my credit card and pay it off every month because that's one payment, and I don't have to deal with it as much as I can put on there. And then I get my points, right? I'm double dipping. So, always pay attention to these icons. If you enter an invoice, you have to receive payment on it because you did that step. But if your customer pays you at the point that they purchase, skip all this. Just go right there. And notice then it tells you to record a deposit of all those receipts that day. All right, any questions? Now the home page will be customized, and we'll see that in the preferences. If you don't do payroll, then you can take the employee section and make it go away. And we'll see how you do that in your preferences. All right, look at page 5. Again, this is just so if you're out there looking and putting in help, like, where's this on the menu? Most of us know what a menu is. But again, that's called the icon bar at the top. And help is always F1, just like it is in any software. All right, let's turn to page 6 on using forms. I always recommend that you use the transaction window or the form for the particular task that you're trying to complete. So here I've given you one that's called the Enter Bills window. If I open the Enter Bills window here, the name of this window is always up here in the title bar. And this is going to guide you through entering this transaction. It's a lot easier than when you're doing a journal entry. Anybody ever do a journal entry in QuickBooks? I got to figure out how to double entry this thing. Here, it's going to be self-guided. It's going to automatically hit accounts payable. You don't have to worry about what the offsetting entry is. All you got to worry about is getting the main entry in. So that's why I always recommend using the form, because it's a lot easier. On page 7, we talk about centers. Now, this is a transaction window, okay? It's a form for entering transactions. Notice that it links to a vendor account right here. Well, you have to create those vendors. You can create it on the fly, which means you're just typing a name in, and then it'll say, this isn't in there, do you want to add it? Anybody ever do that? Of course, if you have it in, you just can drill down. I always recommend naming these something that you're going to remember so that when you start typing, it'll go there. All right, giving it a name that's going to drop down the list. But we have to get to the point where we actually create these accounts. Maybe we want to create a bunch of them at once, or we want to manage them. We want to make some changes to the account. And that's done through the centers. There's a center for vendors, for customers, and employees. All right, so we're going to go to the vendor center here. And this is where we can add vendors. We can actually enter transactions from here. We can also use this to look up transactions. Notice there's 2 tabs. There's the vendors tab, which means it's going to show me all my vendor accounts. So if I'm looking for something on a particular vendor, I can just go to that specific vendor and look over here on the right-hand side and sort for what it is that I'm looking for. These are your filters. So I could look just for bills, which we don't have any here. Or I could look, you know, I think that had checks here, right? There's the checks. And then I can double click to open it up and see what it is. All right, so it's nice to use the vendors tab when you know the specific, say that 10 times, specific vendor account you want to look at. But let's say I want to say, what was that bill I entered last week on Tuesday? Then you go to the transactions tab. Yes?
I'm sorry, but is the bill something that you owe or something that somebody owes you?
Good question. A bill is something you owe. An invoice is something somebody owes you. Okay? So here when I'm on the transactions tab, I can drill or go to particular transaction types: purchase orders, item receipts, bills, payments. Bill payments are when you use the automatic print multiple checks as opposed to checks, which are just enter checks. All right, so you need to look in the 2 different areas. And then again, you could filter to a specific date if it was something you wanted to look at last week. So those are quick ways to look up things on the account. Again, if you need to modify an account, you're going to do that on the vendor center. Right here is the vendor. If I double click on that vendor, it brings up their account so that I can change any of the settings. And we're going to go through all these. So don't worry, I'm just trying to show you how to navigate through and find information. On page 8, it talks about registers. I'm not a fan of entering things through registers unless you know what you're doing, because it's a lot harder. Go to the form and enter it. But registers are only there for certain accounts, such as checking accounts, charge card accounts, accounts receivable. So you can double click here and look at the form that it looks like. So you're really going to need to know how to enter in here. You have to supply the account. It's not as user-friendly as using a form. All right, so let's look now at page 9 and talk about accounting, my favorite subject. No, just kidding. Really, I always tell my clients, don't worry so much about did you get the entry in there correctly. Let the accountant look at what you did. The most important thing for you to do is to capture the transaction. Because if you don't capture it, then it gets forgotten and it's not there at all. Accountants will always look at the details of entries and see if something's in there correctly. But let's talk a little bit about accounting. On page 9, it's showing you the chart of accounts. Now, I'm going to open up the chart of accounts. Control A will do that, or else you can go to List, Chart of Accounts. Notice the numbering system here. How many of you have numbers on your chart of accounts? Oh, you are the rarity. Accountants like numbers. Ones mean assets. Twos mean liabilities. Threes are equity. All right? I think I've outlined those in here somewhere. Because instead of sorting this alphabetically, it's sorted numerically, meaning you're going to show me your assets first. You're going to do your liabilities next. And that's generally how accountants are used to seeing things. Every transaction you record has to go to one of the chart of accounts. Right? So it has to go to, and of course it has to go to 2. And sometimes it'll be 2 or more because it has to balance. So it's double entry bookkeeping. So when you look at your chart of accounts, notice that there are types here. QuickBooks isn't all-knowing. You have to tell it things. It knows that assets, liabilities, and equity accounts go on the balance sheet. It knows that. But what it doesn't know is if your account is assigned to the correct type. I've seen people set up expense accounts and make them an asset. Of course, it's going to show up on the balance sheet because it's going to show up wherever this type tells it. So QuickBooks looks to the type to see what financial statement it appears on. Income, cost of goods sold, expenses, they're all going to appear on your income statement. So you're setting up your chart of accounts so that QuickBooks knows where to place these things. I've tried to define on, well, I guess let's go to page 10 first. And that's where I've given you. Asset accounts begin with 1. What comes after that's up to you, but generally you're going to put your checking, your saving, your current assets towards the top. So you'll see these are 10100, so that's going to sort them to the top. And when you see this account, whoops, I'm going to edit this account. Right here's the account number. All right. So on page 11, I've tried to define some of the basic assets, liabilities, and equity. Equity is what's left over. So assets are checking accounts, your investments, your accounts receivable, your fixed assets, your intangible property such as goodwill or patents or anything that you have to amortize. Liabilities, payables, loans, we all know what those are. None of us seem to have problems with liabilities, right? And then your equity is simply the difference between the two. But really, this equity section, let's go down to the 3s. I can look at this equity section, I can say this is a corporation. Why can I say that? Because it's called capital stock. Corporations are the only thing that have stock. So if I name my equity account capital stock, then this must be a corporation. If it's a partnership, it's going to say partnership equity. Or it might say Joe Smith, equity, Tom Smith equity, put each person, so because you have to keep them separate. If it's an LLC, it's going to be members. They're called members in an LLC. So when I look at that equity section, I kind of know what's the formation of the business. How's it operate? Here's a lot of times what people forget. Let's say that you need to pay a bill. And you're waiting for money to come in from a customer, but so you go ahead and put $1,000 in there. Where does that go? What is that $1,000? Does anybody know? It can be two different things. Depends on how you classify it. It can be a loan from you, a loan, or it goes into the equity section as a contribution to capital. Right? You need to record those transactions. It's not sales, right? You're not going to pay tax on it. So it's either a loan or it's a contribution from the owner, whether it be a member, a stockholder, or a partner. On page 12, we look at income and expenses, what those are, and then, of course, net income or loss is the difference between the two. Page 13 is an important concept that most people miss. Bless you. Because QuickBooks, by default, sets this up to be accrual-based. Most small businesses are going to be cash basis. You want to be cash basis. Anytime the IRS says you have to be something, you probably don't want to be it. All right? And there are rules in the IRS code that say certain taxpayers must be accrual-based. It's based on, amount of sales, how much inventory. So cash basis merely means that you don't pay tax on income until you receive it, but you also don't get to take expenses until you pay them. Now, I want you to keep in mind that if you put something on a credit card, you have paid it. So you get to take that expense when the charge occurs. I've seen people miss that. They'll just go in and put the payment to the credit card company. And if you pay in January, chances are you've got December expenses on there. You get to take it when you charge it because you have a liability.
I always thought you had to wait till you paid that.
No, you don't, because you're liable for it. If you went and borrowed money and used it to buy something, you get to take it because you're liable to make the payment. All right, so you want to be real careful and make sure that you use cash basis. And I'll show you here an example as to how it can make a difference, especially if you're using a lot of receivables. If you bill clients and you wait for money to come in, that can make a big difference in your taxable income. How do you make the election to the service, to the IRS, that you're a cash basis taxpayer? How do you tell them that? Does anybody know? Did you ever look at your tax return? Now, if you're a sole proprietor, by definition, you're cash basis. Because we as people, individuals, are cash basis taxpayers. But if you're a company, you have to make that election, and you make that election the first time you file a tax return. It'll ask the question, am I cash basis or accrual? And you want to mark cash. Yes?
Even if you're a corporation?
Yeah. It's based on the rules, and I don't remember the exact value, but I think it's like $5 million in sales or so much, 25 million maybe in inventory. I don't remember the numbers. Then you have to be accrual basis. Have to. Now, at one point they talked about we're going to make every business be accrual basis. And I'm thinking, are you kidding me? I can't get my clients to just record the basic transactions. Now you're going to tell them they got to be accrual basis? Believe me, accrual basis is not easy. It's hard. All right? So, I don't know. They're always trying to look for ways, right? In QuickBooks, we're going to look at, when we go through the preferences, the setting that will tell QuickBooks, always run my reports on a cash basis. Stop running them on an accrual basis. If I go out here right now, I'm going to go out here and get a report. I'm going to go to company and financials. I'm going to run a P&L. In QuickBooks, it's called a profit and loss. I remember when I was a first year accounting student, I sat there and they're like, income statement, P&L, profit and loss. I'm like, what are they talking about? Can't we just use one word to mean that one thing? But no, we have to define it 5 different ways. So a P&L, a profit and loss, an income statement, that's all the same thing. All right, I'm going to go into this profit and loss, and I'm going to run it for this fiscal year. And notice that, hopefully you can see down there at the bottom, can you? Pull it up. The net income right now is $113,560. Notice in the left-hand corner of this report, what does it say? Accrual. That is the default for QuickBooks. I don't know why. You're dealing with small businesses. Why would you do that? Now, I'm going to customize this report and turn it to cash basis. Remember, we have $113,560 in income. It dropped to $62,000. I'd rather pay taxes on $62,000 than $113,000. So you can see, of course, this is a company that has a lot of receivables. May not matter to you if you're really recording your transactions on a cash basis. You don't put any bills in here, you don't put any receivables in here, then it won't matter to you. But if you're using receivables, most people will do the receivables and never enter bills. So now they're really overstating their income and paying tax on it. Any questions on that? Yes?
Once you change it to cash, will it know to do that every time?
No, that won't. I'm gonna show you where you turn it in the preferences and make it do that. Okay?
And just to back up a page, you had a comment about assets, whether you loan yourself money or whether
Yes.
you make a contribution.
Yes.
And that would also factor into the ultimate profit and loss statement?
No, it wouldn't.
It wouldn't.
No, because it would be going into an asset and a liability, or an asset and an equity. Okay? Did you have a question back there? Somebody did? Oh, yeah. You filed 3115. Do you have a tax preparer? Go to your tax preparer and tell them that you want to convert to the cash basis. And they'll do it when they file your next tax return by filing a 3115. All right? Yeah, if you make a loan, well, you don't have to make your bill. Maybe you just write yourself a check, and then you can just write check. You don't always have to do a bill. Now, here's the thing I want to caution you about with loans, okay? If you're doing a loan and like next week you're going to pay yourself back, that's okay. But if you're doing loans, and then these loans are building up and building up, the IRS says, number one, you have to pay interest on that. It's a related party transaction, so you better assign it interest, because if you don't, the service will come in if they audit you and they'll assign interest. It'll probably be higher than you wanted. All right? The other thing is you should have a note. Go to the store and buy a promissory note. Or go online and try to find a promissory note. It doesn't have to be that big. It needs to say the date of the loan, the amount, the interest rate, whether they're just paying interest or it's, a demand note, you'll demand it back. That's what most people do. But if you get audited, that's the first thing they're going to ask for. Where's that note? Especially if you're a corporation. When you're a corporation and you don't have this note, and particularly if the shareholders borrowing from the business, shareholders borrow from the business, because they don't want to take wages that year and they don't want to take dividends, so they take a loan out. The IRS will come in and recharacterize it and say it's either wages or dividends. So you want to make sure you tie down. If you have a loan, what if you got a loan from me? What would I do? Always think of that. Don't think of it as this is your company. If you went somewhere else and got a loan, you'd have a note. And that's what they want you to do. They don't want you to treat this company as you, as your alter ego. It is separate from you. If you're a sole proprietor, it doesn't matter. How many people are sole proprietors? Okay. It doesn't matter for you guys. Right? So when you get into those company forms, LLC, corporation, S corporation. Any other questions before I go on? Okay, so page 14. If you went to go get a small business loan, maybe you went to the SBA, maybe you went to a bank, you're going to need to produce the financials, and on page 14, I've listed the basic financials. Your balance sheet. Your balance sheet is a picture of your business on that day. All right, so December 31, October 31st. Whereas a profit and loss or an income statement is a picture of your business over time. 6 months, 1 month, 1 year. The statement of cash flow, and I'll show you one of those. It actually starts with net income. Remember, on the accrual basis, it was $113,560. Remember, it was on my profit and loss? And it takes it back to a cash basis to see how much you generated in cash, and then ties it back to your bank balances. What was it at the beginning of the period? What was it at the end of the period? This is a pretty important statement, because it tells what cash you're generating from your business. Here we're looking at a business that generates from operating activities $43,000 in cash. They then went out and bought some furniture and equipment, used some of that cash to buy some furniture and equipment, and they also paid back some loans. If they borrowed, it would go the other way, it'd be a plus. So when you have a statement of cash flow, you just don't want to look at the bottom line. You want to look at where the cash come from. I could borrow $100,000. I'm sure I'm going to have positive cash, but I got $50,000 negative from my operating activities. As an investor, you want to look at those things. If you invested in a company, are you generating cash from your day-to-day activities is important, because that's what you're in business for. And what are some of the reasons you may not be generating cash? You got too much sitting in inventory. You're not turning your receivables over. All right? You got poor cash collection because you don't bill people, and you don't turn them around, and you don't give them terms, and you issue credit to people that don't pay. Those are all signs that the company's not very well managed. And of course, someone who's going to invest in your business wants to see that. So it's not just what's bottom line on the profit and loss. It's not just what's on your balance sheet, your debt to equity ratio, but it's how much cash you're turning around too. So those are the three important statements that any lender is going to want to see, or an investor. All right, page 15 talks simply about exiting QuickBooks and backing up your data. Backing up your data is very important. Did you lose your data before? Not good feeling, is it? I know. Not a good feeling. I am a person who cannot have enough backups. I actually I use Carbonite. I don't know if anybody's ever heard of it. It's online. real-time backup of my system. You can see the little green thing right there. Of course, it can't be backing up right now because there's no internet. And then I also have an off-site little hard disk that backs up to. Because you can't get this stuff back, and believe it or not, the IRS is coming in and asking for these things now. They want your QuickBooks file. They're going to go through that data. They're going to look at something called the audit trail and see everything you did in here too, so don't be changing things after you get the audit notice. Because they go down here. It's serious. I shouldn't be taped, you know. Is somebody taping me? Because I tell things I shouldn't. You see that audit trail? If it shows all the entries when on your system, it'll show every entry. If you changed a transaction, if you voided a transaction, if you deleted a transaction, that's what the audit trail is.
So, can I ask you about that hard copy backup system that you use?
Mm-hmm.
Is it like specifically compatible to QuickBooks?
No, I back up everything, not just QuickBooks.
So you can put in a blank disk and
It's actually one of those little terabyte drives. Yeah.
Oh,
Yeah.
Why do you do that and the carbon?
The reason why I do it is because if I just want to go, I've accidentally deleted a file before. And instead of going out to Carbonite and go look everywhere, I just go right over that little terabyte drive and I can drag and drop it. That's why I do it.
It's a nice off-site backup.
Yeah.
For your house.
Yeah, because here's the problem. People back up stuff and then it gets burned up. And you're in a house fire or a business fire, and then you're in trouble. Where this is online, Carbonite's online. Yes.
Can you turn off that audit trail function, or I imagine not? Not for myself, of course.
I have a friend. I have a friend who wants to know.
Huh? Oh, yeah, you have a friend who wants to know, right? No, you know, in the old days, not that old, 5, 6 years ago, there wasn't an audit trail in QuickBooks. Now there is, and you can't turn it off. But let me tell you what you do. Every year, you create a backup of that year. All right, so if it's December 2012, create a backup file. Because if the service comes in and asks me for the QuickBooks file, do I want to give 13 and 14? No. They get a little nosy then, right? I'm going to give them that backup file. I had a client who didn't do that and had all these transactions, so they brought the file to me, and I have the ability in an accountant's copy to strip all that out and just give them those transactions. Because I don't think it's any of their business what goes on the other one. You know, the problem is if you get an audit, let's say they want to audit, well, let's see, it's 13. They would want to audit 12, and if they find problems, then they'll want to go to 11, and they'll want to go to 13. So they start in the middle. You only get 3 years, unless they find fraud. Then they get 6. They get 3 years from the date you file the return to do an audit of that return. If you go back and amend the return, that renews the whole 3 years, just so you know that. But, you know, they're going to usually pick that year in the middle, because then if they see a problem, they'll expand their audit. So you don't want to give them stuff to look at. Only what they ask for. All right, and the instructions for backing up are on page 15. Any questions?
Where did you find that audit file?
Reports, accountant and taxes, audit trail. You got a Mac version though.
Yeah.
I don't know about that.
It's the same thing.
Is it there?
Yeah.
Because a lot of times things on the Mac are different.
Yeah.
I love the Mac, but it just can't use it in the business world. All right, you're now ready to go to lesson 2. Here I'm I'm going to create that QuickBooks file for you. So what I'm going to do first, I'm going to close this. Actually, I'm going to, I'm going to exit this, close this company. I'm going to toggle to the edition you guys would be using, just so you don't see things that aren't maybe in the book. Notice I can toggle to another edition so I can emulate QuickBooks Pro. Dinner is a cookie. All right, so now I'm going to create a new company. And I'll try to follow this real close because I tend to get off things. All right, so I'm going to use the Express Start. You have to give it a name. Anything with the red asterisk, you have to give it. What industry are you in? And the reason why I ask you this is a couple of reasons. Number one, it's going to give you like some sample chart of accounts later on, but also this is a way for Intuit, which is great at selling you stuff you don't want. They want you to use their TurboTax, kind of map entries back and forth. So I think in the example, what did I use? General product-based business. And notice this is the account, the chart of accounts they're going to give me. They don't give you a whole lot. All right, they just give you some of the basics. Company type. This really is going to determine what the names are on the equity accounts. All right. Remember, with a sole proprietorship, it's just the same as you. You file it on your Schedule C. With a partnership, you're going to file a 1065, which is a separate tax return. A single member LLC, you're going to be treated just like a sole proprietorship for the IRS purposes. When you form your business, you always want to think of it two ways. What am I in the eyes of the law? And what am I in the eyes of the IRS? All right, if you're an LLC, you're a separate legal entity. Protected, right? Protected from personal liability, not all the way, but mostly. But the IRS sees you as just a sole proprietorship because when the LLCs were created, Congress did not go out and create a whole new section of the tax code. They said, what are we going to do with these little beasts that are created by lawyers? We're going to, if you're one person, we'll make you sole proprietorship because you can't by definition be a partnership unless it's two or more people. If you're multi-member, notice it says Form 1065, then you're treated as a partnership. Corporation, S corporation. You can form your own entity. I just caution you, don't be doing operating agreements or those agreements. People go out and grab stuff off the internet, and then if you ever end up in court, the judge is going, what are you? I had that one time where they're an LLC, they formed it themselves, which you can do that, the Secretary of State website, $125. But then they went out and got a partnership agreement. And you're not a partnership. So the judge is saying, well, what are you, a partnership or an LLC? So you see, I can get into trouble when you start doing documents. But you can form your business. If you're just yourself, go form your business. Go to the Secretary of State, form your business. Ohio Secretary of State. If there's you and a partner or somebody else, then I suggest you don't just do that because you really need to have an agreement up front. I call that like a prenup for businesses. Because when you have problems down the road, you need that document to go back to. But you can't go out to the Secretary of State and form an S corporation, just so you know that. That is a fiction created by the service. So you form your corporation, or you form your LLC. An LLC can be treated as an S corporation too, for tax purposes. An S corporation is a tax fiction. Then you go to the IRS and elect to be treated as an S corp. So that is an election made with the IRS, just so you know that. So if you're going to go to the Secretary of State website, don't look for an S corp. It's not there. You either form a corporation or an LLC, and then you elect with the service to be treated as an S corp. All right, so I think in the book, what do I pick? I pick corporation, page 22. If you're going to do payroll in QuickBooks, you do your EIN, you put your EIN in here. Otherwise, you don't need to put your EIN in here. Does everybody know what an EIN is? Anybody not know what it is? I always say it's like a Social Security number for the business. All right? And you get that EIN, again, at www.irs.gov. So once you form your business with the Ohio Secretary of State, you go to the IRS and get your EIN. And then you can go open your bank account using your EIN. And from there on out, I even say for sole proprietorships, you might want to get an EIN, because in today's day and age, I don't like giving my Social Security number to anybody. That's a way of not having to give your Social Security number out. Because if you're a sole proprietorship, I'm supposed to give you a 1099. I'm going to want you to fill out an I-9. I'm sorry, a W-9. An I-9's if you're an employee. And you're going to provide your Social Security number, or if you get yourself an EIN, you give the EIN number. All right, I'm not crazy about giving out social numbers anymore. They need to revamp the whole system and just do away with social numbers and give us all some other kind of number. All right, any questions? Do you have employees? I don't remember what I said here. I said no? I don't like small businesses to do their own payroll because I'm a tax attorney, and generally I see a lot of problems with that. Payroll is just too time consuming. You can make a mistake, the penalties are hefty, and you are personally liable for it. Remember I told you there's things you could be personally liable for? Even though you're a corporation? Not paying your sales tax, personally liable. Not paying your state unemployment tax for your employees, personally liable. Not paying your federal withholdings or state withholdings or city withholdings for employees, personally liable. State of Ohio has 40 years to collect. 40. IRS has 10. But that's from the date you file. Most people I see, they didn't even file. If you don't file, this doesn't start ticking. You got to file that tax return. You got to file those 941s. You got to file the 940s. It starts the clock. Until the clock started, you're not getting out of anything. And again, you'll never get out of anything in the state because, man, they got a long time. All right, so I'm going to click continue. Yes?
If you initially set it up, there's no employees, did you hire some?
I'm going to show you how you can turn that on. Yes. Remember, as you're going through this, don't panic. We can turn anything back on. We can change anything. All right? So don't panic. What? Except the audit trail. That's right. I like that. Why it wants my phone number? Probably so Intuit can call and harass me. So there's my settings. I can make a little bit of modifications here. I could, it doesn't even let me do anything there, so hey, I guess I got estimates. Here, I can go down and maybe pick some other accounts that it didn't give me initially. I can give my sales discounts, purchase discounts. And this is where it's going to save the data file, all right? Of course, I'm going to change it to my desktop because I love to clutter my desktop. And, okay, why is it not creating? Oh, I didn't give it my zip. Create my company file, and there it is. It's creating the little data file. And the little data file is always whatever, here it's going to be test.qbw. QBW is QuickBooks file. All right, so now we're up to page 25. So here you can go through this little helper thing, add people you do business with, add products, add your bank accounts. I tend to skip that part because you can do them individually, because what I want to delve into is on page 27. I don't like what QuickBooks gives me. I'm going to say start working. Gee, it already wants to sell me stuff. All right. Edit preferences. I believe I give you that command at the top of page 27. These are the general areas that you want to look at on the left. And notice there are two tabs. My preferences means just that, my machine. So you can have different preferences, and you can have different preferences, and I can have. It's to the machine. Company preferences go with the data file. No matter where you take this data file, these company preferences are going to be in it. So let's look at accounting first. Before I do this, I'm going to show you when this is one of the things I hate about QuickBooks. What is missing? Does anybody see anything missing on the chart of accounts here that I talked about? The ones, the twos. There's no account numbers. Why you do that? That's why I get everybody's file without account numbers. Because they went through this and created it. And they didn't, it doesn't turn them on automatically. So if I touch this, I'm sorted in alphabetical order. So I got income, expense everywhere. All right? So instead, what I'm going to do is I'm going to show you how to turn that on. Now I'm going to go back to Edit, Preferences. I'm on the Accounting tab, on the Company Preferences, because this goes with the company file. And you see that little option to use account numbers. The other thing you have here is warn if transactions are 90 days in the past and warn if they're 30 days in the future. I'm always working behind the times. I'm still doing 2013 tax returns. Why? Because they're not due. If they're on extension, they're not due till September or October 15th. So you have a tendency to maybe put the wrong year in when you do things. You can always stop somebody from entering in the past. And that's by setting a closing date. And we'll talk about that again tomorrow. But when you go in there and set a closing date, then if somebody tries to enter something in the past, say I put 12/31/2011. If somebody tried to enter something before that date, it's going to come up and say you're trying to record a transaction to a closed period. Do you want to do that? Now, if it's just you using QuickBooks, that's enough because it's just a reminder for you that you maybe put the wrong date in. But if somebody else is doing this and you want to stop them from doing it, you give it a password. And when you give it a password, they got to know the password to override that prompt. Otherwise, they won't be able to backdate things. The problem is, this is the only way to keep yourself from accidentally hitting stuff in the future, is to get that warning that you might be posting into the future accidentally. So you want to have that in there. All right, I'm going to change the bills and watch. It says you've made changes, so I'm going to save it. Notice I now have account numbers. And QuickBooks assigned it. 3,000 is equity. All right, so it knows the nomenclature as well. All right, so what I just showed you is on top of page 28, or it's on 28, period. The next thing I show you is on page 29. Payments. When you're receiving payments on an invoice, these two things govern. So you could go in to that transaction window and say somebody paid you $1,300. If you enter that amount, it'll automatically apply the $1,300 to the invoices listed at the bottom of the window. That's what this means. Here it means if instead of entering the $1,300, you just go down to the bottom of the window and click the invoices. Then it will automatically put the amount up at the top of the window that they've paid. This feature you may want to use and you may not. If you get one deposit, some people are contract billers. They know that they're going to invoice and they're going to get one deposit when it comes in. You don't want to use that feature. It's a nuisance. Because what happens is you go and you receive your payment and then you got to go make a deposit. Well, it doesn't matter to you because you're not trying to reconcile 50 different deposits on your bank statement. Whereas if you're a person who takes to the bank 4, 5, 6 checks, now you want to use that because when you get your bank statement, it's going to be one number, what was listed on the bottom of the bank deposit slip. So it's going to be harder to reconcile your bank statement if you don't go make a deposit that matches the deposit ticket you took to the bank statement or to the bank. You understand? But using that feature requires that extra step of record deposits. Now, I've seen people do this because they don't know this little thing goes on here. And they record their invoice, they record the receipt from their customer, and they keep putting it in. They keep going, why do you have it in like 5 times? Because it's not in my bank account. It doesn't go in your bank account until you record the deposit. So you're sitting there and you're chasing yourself trying to figure out every time I look at my bank account, it's not there because it's sitting in this account called undeposited funds. You got to go make a deposit and then it transfers it out of undeposited funds into your bank account. All right, so if you're using that feature, be aware that you're using it. Yes?
So, just back up a little bit. The automatically applied payments, if that's checked,
Uh-huh.
and someone pays for a July invoice because they forgot it, but we're on October, it's going to automatically apply it to July? Okay.
It's going to go to the oldest. You can always change that you can always go down to the bottom of the window and change what it's selected. It's just to make maybe your data entry a little quicker.
So just, to make it quicker, just uncheck it and you just do it manually.
Yeah, if you don't want that feature, you
Right.
uncheck that and then you'll always do it manually. Okay?
Thank you.
You're welcome. Notice that's a default. Notice when I open this up, it's a default. So if you don't like something, you got to go to preferences and change it. All right, let's look at On page 30, I list some other settings you may want to look at. Bills. Again, I'm only going through company preferences. You know, warn when I put a same bill number from the same vendor. Make sure you don't pay it twice. Another one is items and inventory. If you want to use inventory and purchase orders, then you need to check this. Notice it didn't come up by default. Therefore, you try to go enter inventory, it wouldn't be there. So that's a preference that needs to be turned on.
Why would you not want it?
Because not everybody, if you're a service-based business, you don't have inventory. Jobs and estimates. Why is it doing that? If you want to use the estimates, remember there's a little icon. If I say no, I don't want to use it, it'll take that icon away from my homepage. That's the little bit of customization you can do to the homepage. Payroll and employees. Again, if you're doing payroll, this is where you can turn it on or turn it off. Remember when I went through, I turned it off, right? Or did I? Maybe I left it on. If you don't want to do it, you turn it off there. It'll take away the whole employee section. All right, it'll leave the little employee thing there, but all the things that were down there will be gone. Yes?
So if I'm the only person on my payroll, it seems like it would be easier to do that than to outsource that to like an
Well, let me ask you a question. How are you formed? How are you? Are you a sole proprietor? Are you a corporation?
LLC, single member?
You don't have payroll.
Okay,
You just take out money.
okay.
All
Because
right.
I was trying to figure out the best way to deal with all the taxes and all that. And someone had said, oh, just make yourself an employee. Okay.
Owners of an LLC should never get W-2s because you're not employees. You're going to be taxed on the entire net income of the business, whether you take it out or you don't take it out. That's why I kind of don't like LLCs. I like them legally, but once you start making money, I'm not real crazy about them. Because I don't know about you, but most people don't take every dollar out of their business. So if I made $100,000 in profit and I took out $50,000, I'm still going to get taxed on $100,000. But $50,000 is sitting over in that company. That's when you sometimes want to think about electing to be an S corp. Because then you're only going to be taxed on your wages. Then you do get wages. And then you can take some distributions as long as you pay yourself a reasonable wage. But that, you know, when you're an LLC or a sole proprietorship, you don't have payroll. When you're a corporation, there's only two ways to get money out of a corporation. The owners can only get money out by dividends and wages. That's it. That's why they call it double taxation. Because all the income is taxed, and when you take it out as a dividend, it's being taxed again, right? Wages are okay because you're getting to deduct those. But dividends are not good because it's double taxation. Right? Let's look at sales and customers. Again, you can use price levels. So if you have inventory and you're selling items and you have certain clients that you charge it, sell it to them for a different price, maybe they're wholesale or they're your preferred customer, you can turn on that use price levels. Sales tax, this is where sales tax is turned on. I'm going to say yes. Now, does anybody know what option to pick there?
Cash. Cash.
I wish. This is where it defies logic. In the state of Ohio, as soon as you send the invoice, you owe the sales tax. Maybe you don't get paid for 20 days. Maybe you never get paid. But you owe the tax. It's an accrual-based system in Ohio. Now, if subsequently you end up writing that invoice out, then you're going to reduce your sales tax liability accordingly. But remember, you're without that cash all that time. And if you're in a business where people don't pay you for 30, 60, 90 days, man, that's not good. I funded the sales tax, so they paid me. Just thought I would point that out because it's counterintuitive, right? $10.99. First of all, I accidentally left something on here. So for those of you who have a pencil, go to Reports and Graphs. Right down at the bottom, right on that list on page 30, Reports and Graphs. Oh, I gotta give it a sales tax. You nitwit thing. Of course, I turn it on, it makes me do it. Good enough. Under Reports and Graphs is that feature right there. That's how you turn all your reports to cash basis. I need Pauline to remind me to fix that. She didn't even know what I'm talking about. That's where you put that in there. Now, every time you open a report, it'll be on the cash basis. All right, let's go.
Is that just set for that company or?
Just for this company. Just for this company file. You'd have to do it in every company file. Now let's look at 1099. If you pay vendors $600 or more and they're not a corporation or an LLC, means they're sole proprietorships or attorneys. I don't know why the IRS always want attorneys ratted on. Then you have to give them a 1099. So you make sure this is on, and then whenever you create a vendor, and we'll see that later on when we create vendors, there's the field to say this is a 1099 receiver. And then QuickBooks will automatically track what you pay them all year, and then you can print the 1099s right out of here. Time and expense. If you're, let's say, a landscaper, somebody who does job costing and you're billing people for your employees' time, then you can turn that feature on. I'm going to say no. But of course, the problem is then they need to track all their time needs to be entered into the system. All right. Any questions? Page 31 just talks about a couple of my preferences, but those are something that you can do. Page 32. We're going to look at customizing the chart of accounts. Notice my icon bars on here. Did anybody notice that? You can close this thing out, go to View. There's your icon bar. All right, so always think about if I don't see something on the screen that I want to see, go to View. My home page disappeared because I changed some of my settings that took away icons. Notice the employee section is gone. So whenever it had to do that, it had to close my home page to do that. So I had to reopen it. All right, so let's look at how we customize the chart of accounts. Account, new. And I've kind of given you the picture of that. And so now I'm going to add a banking account. But let's say you're adding an account that's not easily listed here. Then you use this drop down to find it. You can only have one accounts receivable account. You can only have one accounts payable account. So I don't know why they list that there, because usually QuickBooks creates that. So you're limited on the accounts receivable and accounts payable. You definitely want to have a credit card account type. Otherwise, you can't enter your credit card transactions. It needs to have an account type called credit card for you to enter credit card transactions. Don't do it. My client did one time. They would spend like, I don't know, $10,000 a month on a credit card and then they'd pay it all off. So they just put the check in, $10,000. So when I get the books, I'm like, how do you have like $50,000 in miscellaneous expense? I can't put that on your return. What is this? They had to go back through the whole year and figure out every one of those credit card charges, what they were. Because meals and entertainment's only 50% deductible. If it's meals and entertainment, it has to go in that. You got to put travel where travel goes. You have to put them in the categories they go. Not just 50,000 miscellaneous. It'd be nice if it was that easy, but it's not. So if I create a bank account here, continue, I am going to give it an account number. Usually bank accounts sit right at the top of your chart of accounts. Remember, it's an asset, so I started with 1. And I want my checking account to be the first thing that appears, so I give it a bunch of zeros. And I'll say checking account. If you want accounts to be grouped together, like sometimes people will have insurance, and underneath that they'll have business, auto, whatever, then you'll have a main account and then you use sub-accounts. When you create the next account, you say that account is a sub-account of the main account, and they'll kind of group it. Of course, it wants to sell me something because they opened up a bank account. All right, so notice that that's there. Notice when I was talking about with the credit card, there is no credit card icon down here because I don't have a credit card account. So if I add that, whoops, I didn't give it an account number. Shouldn't have let me do that. Now you're going to see that I got enter credit card icon? So if you don't see that, you don't have a credit card account type. You have to have the account type credit card.
How would you handle a debit card?
A debit card, I would just enter the, here's what I do. I go to write checks, and I just put here, instead, wait a minute, turn off. Oh, where's the print feature? Should be a to be printed feature here, but of course I'm not used to using this version of QuickBooks. Oh, right here, print later. I turn that off, and I put here EFT, electronic funds. That's what I do. Even if you do it online. Notice on page 35, when I create an account, I could enter the opening balance. There is no way I'm doing that. That would take forever. I enter, if you're entering opening balances, I enter them all as journal entries. I can go right down the line as I show you on page 35. So I go to company, make journal entry, make general journal entry, and you can enter your opening balances right here. Enter your date, and then go down and pick all the accounts. You create all your accounts first, then go enter your opening balances. You're only gonna have opening balances if you're using QuickBooks from another system, or you've already been in business and now you wanna start using QuickBooks. That's the only way you're gonna have opening balances. All right? If you're brand new, just starting out, you won't have any opening balances. All right, let's go to page 36 where we add customers. Uh-huh, sure.
When you're entering your opening balances, if you're transferring it from, say, Peachtree to QuickBooks, you're just basically printing out your,
Well, what if, let's say you're entering them for 2014, the beginning of 2014.
right.
You would enter your December 31 for 13 balances.
Okay. So if you were to just print your, I don't know, balance sheet,
Now, you print your trial balance.
your trial balance,
Mhm.
and then just go straight down the line?
Yes, absolutely.
Thank you.
You're welcome. All right, so where, does anybody remember about customer? Oh, go ahead. No. Vendors are people you owe. Customers are people that owe you. To enter vendors or customers, you have to go to the center. So here I'm showing you the add customers. So I open the center, and I hate that feature where it turns those little yellow things on. Notice there's nothing here. So I go new customer, and you're going to enter your customer name. I don't know if I had anything. I think I just made something up. Of course, where'd it go? Oh, it just went away forever. All right, so I'll put ABC Company. They're my customer. Now, if your customers have opening balances, you could enter it here, but the problem I have with that is how are you going to know the age of the invoice? So you're better off, if you don't have a lot, is going and entering your invoices after you do this, using the date on the original invoice. Otherwise, you don't know the age of them. Because this is going to be aged, you know, if you're starting this on January 1, it's going to be aged from January 1. Well, maybe they owed you like 6 months ago. So again, you know, you want to watch entering opening balances instead of avoiding going and putting the actual transaction in. All right, so here's the company name. Of course, you give it the phone number. Anything else you want here? Here's your this is your invoicing, and if a company has a different ship to address, you could then put it over here. All right, the separate address. If you're going to email your customers their invoices, then put their email here. And then you can actually email the invoices. It'll pull it over. Everything you put in this form is the default. So when you open up an invoice, it's going to transfer from here the basic information as the default. When you're in the transaction, you can still change it. You can change certain things in here, and then when you go to save the invoice, it'll say you changed the payment terms. Do you want to make that go back to the customer record? Because then it'll change the default. So you can say yes or no. All right, let's look at our payment settings. Here's our payment terms. Is anybody not familiar with payment terms? Okay, so if I pick 210 net 30, that means if you pay me within 10 days, I will give you a 2% discount on your invoice. Regardless, you still owe me within 30. Remember, the shorter the due date, let's put it this way. You're selling merchandise. The quicker you get the order filled, send it out with the invoice, and shorten the payment terms, you're turning your cash around. And that's what it's all about. Turning your cash around to make more money. So payment terms can be pretty important. You want to shorten it, yes.
Would you be describing how to do job?
Not really. I mean, I can talk about it a little bit, but I don't really get into the job part of it. Any other questions? Yes.
Can you send out like reoccurring invoices?
Yes, you can. And we're going to look at that. You can set up recurring invoices, recurring bills, all of that stuff. Yes.
You add a fee by law, or like if you do on completion and they don't have to bill it.
As long as that's disclosed up front, you can give them a late payment fee, yes. Of course, you want to look at the usury laws. You know, I wouldn't go beyond 18% interest a year, although credit cards get whatever they want, right? But it needs to be disclosed up front. All right, so here you would say my preferred delivery method. And you could say email, so that it's going to email them anyway. My preferred payment method. I won't keep my clients' credit cards. They hate it that they have to call me all the time and give me the number. I don't care. Because I'm not going to be liable for it. I'm just not. We see enough with Home Depot and all these places. And I'm not paying for credit reports for a year for people. And if they can hack into those people, I'm probably a good candidate. No, I'm just saying, if you keep those kinds of things, you've got to be careful, because you're subject to the red flag rules, and those rules say, if you have a data breach, you got to notify everybody, you got to give them free credit reporting for a year. I mean, it's a big nuisance. But again, QuickBooks allows you to keep that information in here. And of course, QuickBooks offers their credit card processing system. Anybody use credit cards? What do you use? You have EMS? My favorite, I use Squared. And it's just a little thing that goes in your iPhone or your iPad. Swipe it, boom. It's nice.
Those orders, though, they still make you do the trust wave thing?
The what?
Trust wave?
Nope.
No.
Nope. And you don't pay for a phone line, and you don't pay for a machine, you pay for nothing. And you don't pay a monthly fee. It's the new age.
So what's the percentage?
It's 2.75 a swipe if you swipe it. Yeah, and I think maybe 10 cents a transaction. It's a little higher if you manually enter the card. Well, because there's more risk. The person's not there in front of you. All right.
So if I do want my employees, we, based on that, still fight through.
Yeah, yeah. And the nice thing is, it's the same whether it's American Express, a debit card, no matter what. Discover, no matter what it is.
You charge that fee back to the client?
I'm not allowed to do that. That's unethical. It's a cost of doing business. I'd rather have your money up front. Here's your credit limit. With your credit limit, it's very important if you set that for a customer, then if they go to place an order that's going to make them exceed what they already owe you over their credit limit, it'll warn you. Right? Most of us, we're small businesses, we know what people owe us. But in case you started processing a lot of orders and you have people processing it, you'd want that credit limit in there, and then it'll come up and say, this invoice is going to cause this client to go over their credit limit. So then you can tell the customer, hey, I either need paid or something. I'll put it on hold to pay your account down. Sales tax settings. When we get into recording invoices, we're going to go over sales tax, because There's only like 4 fields on that form that say sales tax. And trying to understand what each one of those fields means, we'll go over that. But here's where you're going to set the default sales tax rate. That doesn't necessarily mean it applies every time. Let's say that I do all my work in my Akron office. Of course, my fees aren't sales taxable because lawyers always make sure they don't have to charge sales tax. But then I go to Cuyahoga County and do work at the client. That's technically done there and needs to be charged sales tax there. All right? So you may, for a particular invoice, need to change that sales tax rate. But you still want the customer to primarily be that county. All right? Yes?
The sales tax is based on reproducibility. We have a client in Phoenix, we actually do their services here.
Yes. Any questions? Additional info, this is mainly used for reporting. You know, let's say you want to have wholesale, retail customers. This rep, let's say you have a sales rep you pay commissions to, so you could do that. And now you went to the restroom and I was going to talk about job info. Any questions on that? Okay. Let's look now at adding vendors. Very similar, and I've explained to you, you know, everything about customers right there on page 36. Again, with vendors. I can open the vendor center from here as well. We have the same kind of tabs. You're going to go add a new vendor and look, it looks very familiar, right? These are now your payment terms that the vendor gave you. And that's going to tell you when your bills are due, especially if you're a person who enters all your bills in and cuts your check, you know, cuts multiple checks at once. And here's going to be what the vendor gives you as a credit limit. Tax settings. This is where you set the 1099 feature. So if the vendor is going to get a 1099, you do that, and that's where you put their social number. All right? This is the default expense account. So let's say that it's a utility bill I'm entering here. Hopefully there's utilities here. Let's do, so when I go here, I can make it have a default expense account so that every time I enter a bill, it's going to automatically bring that account up. It saves me data entry. But you want to be real careful and make sure you pay attention to these things, because if you go to Office Max and you buy some paper and whatever, and then you buy a computer, you have to break that into 2 transactions. A computer is a capital asset. Needs to go as a fixed asset and be depreciated or written off through Section 179. So you have to break that bill apart. Some of it's office supplies, the rest of it's a capital asset. All right?
No matter how much it costs?
Well, there is a new repair reg out. Yeah, I know. We wouldn't like to be so complicated. I'm sorry. Under the repair regulations, you should adopt a policy that says, I, as a small business, this policy is different for bigger businesses. Under the Treasury regulations, adopt the policy that anything 500 and below I'm going to expense. And have that written and in your file. It just came out like last year. Yes?
Most of the businesses business that I do, I never own the inventory. I buy it and I sell it right away.
Okay.
So what is my, right there, what is my accounts?
Do you book an inventory?
Have a non-inventory part
Mm-hmm.
all the time.
Yeah, because you don't track it, do you? You don't do physical counts on it. That's a non-inventory part.
I never own.
And on the vendor, when it deals with any kind of inventory, like non-inventory, any of those, you don't have to set a default account. It's going to go to what the inventory says it is. And we'll see that in a minute.
Drop down menu on my QuickBooks, there's no non-inventory part, so I just add that as a new.
You're not in the inventory yet. Wait till we go to inventory. We're in vendors. Wait till I go to inventory, you'll see it. Okay? I'm going to go there in a few minutes.
So what is that new regulation about the $500 below? How do you?
It's the new Treasury regs, the Treasury repair regs. If you Google Treasury repair regs, I have nothing else to do in life, so I Google these things. Just kidding. Too much sugar in the cookie. But it is a way, and for small businesses, it's 500 and under. You always want to look at the part that deals with small businesses, because it's very complicated for publicly traded companies. It's a percentage of their published financials, blah, blah, blah. You don't have that, so don't deal with it. All right. That's your safe harbor. Additional info, again, this is just for reporting. You know, you can see. Any questions on that? Who asked me about the expenses? Was it you? Good question. Now we're going to go to inventory. I have tried to lay out for you on page 38 the simplest explanation for inventory. It is important that if you are going to use inventory, you understand how it interacts with your financials. Only inventory parts, and let me open this up. Notice sales tax is placed on the item list as well. Makes sense to me. Not really, but. All right, there's your inventory. Service, inventory part, non-inventory part. That's what I was talking about a minute ago. Other charge. I'm not going to go into the other things. All right, inventory part is the only class that is tracked quantities. That's the only one that does it. It's used for when you sell merchandise. Things you buy and place in inventory. So it's going to track your quantities sold, your quantity in inventory, your quantities purchased, the value. It's going to place it as an asset. When you sell an item on an invoice, it's going to expense the cost of that item. That's called cost of goods sold. So every item that you buy of inventory, the cost is going to sit as an asset until you sell it. Then it's going to be an expense. That's how inventory works. Non-inventory part. Let's look at the inventory first. We'll look at the inventory part. Notice the fields in the window. That's the item name. You really want to use like something that you can hypertext that you're going to know. I've seen people go to put these elaborate numbers on there, and then when they go to find a piece of inventory, my God, they want to shoot themselves. You want to put something when you start typing, it's going to jump to that area. Yes. Okay.
So I have inventory.
Okay.
Now, how do you, like, do you have a key
all right, so let's say women's, red shirt,
Okay.
small,
They style, they got SKUs, so.
yes. If a SKU is something you're used to looking at, that you would be able to pick it up and start typing that in so it'd shoot down there, then use that SKU.
But then they come in different sizes, like, do I have to key a size, all 8, all?
How are you gonna know if you have, or if you're out of tens?
Okay, so if I, like, how do I know if I'm not a size?
On the SKUs, I don't know anything about retail, so on the SKU, doesn't it account for the size? Isn't a SKU different for a 10 and an 8?
You know what, I should say SKU, they style number.
Okay,
Like, style number.
so the style number doesn't have the size associated with it.
Yeah, they do.
Then you would only enter in each one of your style numbers, because that's going to have your sizes. In your description, you may want to put woman's shirt red. That's going to be a little more descriptive if somebody doesn't know what that SKU means. Size 8, you know what I'm saying?
Okay, so if I have like style number 25 and they size 8, so I just key in like quantity 50.
Mm-hmm, yeah, that you have.
And then once I sell, okay.
It relieves it. So notice that your cost, of course, you don't have to, you would put it in your initial cost right here. If you had a bunch of items already and you know what your cost is, you'd put how many's on hand when you create this. You would put the cost that you have in it. But as you go along, this cost is going to adjust for when you buy and replace these items. So it'll show the last cost you paid for it. The cost of goods sold account, again, that's only going to get hit when the item's sold. Instead, look where it's going to sit. Inventory asset. This value is going to sit as an asset on your balance sheet until it's sold. This would be the sales price. This is the default tax code, whether it's taxable, non-taxable. And this is where you're going to record the item, the income. So let's say you sell women's clothes and men's clothes. Maybe you want to have two different income accounts. So you see where you're getting your most money. You know, women's clothing, men's clothing. If you want to use that to classify your income, then you would have a different income account, and you set that default. Yes?
Just like that, so we're taking the cost, our cost is $12, they put $12 in, and then where you said a sale price, if I want to charge $25 for that, and then all of a sudden now my vendor charges $14,
It'll adjust.
and then I can also adjust my price if I want,
Right. You can always go back in and adjust your price. It'll only go forward.
to make sure that all customers pay.
Yes.
Except for the gas station was that.
Yeah. No, yeah.
Right.
Exactly. You have a question?
Well, I don't seem to have inventory part as one of my drop-downs. Is that due to something, the way I set up my company previously?
No, it shouldn't.
And your drop-down menu one to type, you were able to have inventory part. I don't have that.
That's weird.
2014.
You should have it. I'll look at it afterwards. All right. Now, once you pick that part, if you're in an existing item, you can't change it. Okay, you got to go to new. Huh, what did you say?
I set it up 14 service to 10.
In 2014, it didn't have inventory?
Set up as a service.
Did you go to preferences? Go to preferences and turn on inventory.
Yeah. but
Okay.
You may not have set it up.
Yeah.
It's like,
Yeah, you gotta-
Service to 10.
Yeah, you got to turn it on. Okay. But he's saying he's got certain kinds of inventory, he doesn't have inventory part. That's bizarre. All right, non-inventory part are for those things that you may buy, but you really don't set it on a shelf. Let's say you're a landscaper and you have rhododendrons. Nobody buys those things. You go get them that day, and you go, whatever, 2 days and install them. But you want to bill your customer for that. And you want to show them that you picked up 5 rhododendrons. So that's what the non-inventory part is. And if you say this item is used in assemblies or purchased for a specific customer, then, you know, you can sit here and have your cost and your sales price. Yes.
So in the example of you're a tailor, would that be fabric that you have?
Yes. Unless you have fabric sitting on the shelf. Yeah.
No, I'm sorry, I'm really confused then. I would have thought that would have been inventory.
Not if she goes out and just buys it. Maybe she doesn't want to track that inventory. You know, it's something that you don't buy and sit on a shelf to be sold. It's for those things that you're buying just for that need.
That's it.
Yes, that's non-inventory.
That's not inventory.
And when the cost of goods sold gets posted, when you pay the invoice from the vendor, I should say pay the bill. When you pay the vendor's bill, then your expense is booked to cost of goods sold. All right? Service is for someone like me. I'm merely just providing a service. So I use this to, if I were using this system, it doesn't work for me, but I would use this just so I'd have a consistent rate. So let's say it's tax service. That's the item name, and I would put down here tax, preparations, whatever, and put your rate there, an hour. And then what sales account you would want it to post to. Yes?
How many physical inventories I don't have?
What? I'm sorry, I can't hear you.
How many physical inventory I sell at mobile apps?
Okay.
Do I use it as under service then, because I really don't have?
Do you buy your apps?
Sorry?
I mean, you sell mobile apps. Oh, you develop them?
We have a physical app and a paper app.
So is that more like a job?
So is it a service?
Yeah, it's really a service, and your cost is you're paying your people. Yes.
So I would use service.
Mm-hmm. Yeah, because there's nothing for you to really inventory. Any questions? No? So we pretty much went through all that to page 43. Sales tax items. Again, I created this on the fly a little bit ago, because when I wanted to turn on sales tax, I had to give it an item. So of course, in the lovely state of Ohio, we have to have a sales tax for every county. See, I'm originally from West Virginia, and they all make fun of us, but we got one sales tax. And we don't have city taxes. Yeah, go to Delaware. Could be worse, you could be in Arizona. Actually, Pennsylvania. Pennsylvania has more city tax than anybody. Illinois? Yeah. But Arizona has like county. I had a client, we had to register in like 30 states. Oh, yeah. Because he has salespeople there. They're independent contractors, but I want you to realize that an independent contractor can make you liable for sales tax, even though they're not your employee.
What'd you say, make you liable?
Sales tax. It gives you nexus for sales tax. So don't think you can get around it by just having an independent contractor.
Do you 1099 something like that as well?
That's an independent contractor when you 1099 them, but their states are saying they're there on your behalf soliciting sales, and you pay sales tax. But some of these crazy, like Louisiana, I mean, you got to get 3 licenses. It's insane. And you try to call Louisiana, New Orleans, and those people don't answer the phone. Because I think they only work from 1 to 2. So just realize that you would need here, unless you're just solely in Summit County or one county, you would need to create one for each of those. All right. Is there any questions? I think that kind of covers our first night. We already talked about closing the accounting book. Now Now, Pauline is passing out a survey that she needs you to complete because we get SBA funding. Oh, this one's for the library. What about the one for you, Pauline, for SCORE? Oh, okay. So hopefully, now bring your book back tomorrow because we're going to use it again. And we're going to start on chapter 3. And thank you, everybody, for coming tonight. Thanks.